You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, you've seen the volatility, the losses that were suffered in the stock market over the past couple of months. And if you're like me, you're probably looking for alternatives. Well, Fred Moskowitz, best-selling author, speaker, advisor, trainer, is here to talk to you about alternative investment scenarios, choices that you can make so that hopefully you won't find yourself trapped in the market again for the next decline. Fred, it's great to have you on the show. So,
thank you, Kerry.
Hey, for a fleeing stock market investor, where is the best option? What is the best alternative to stock market volatility at this moment?
Well, I always love talking about buying assets, owning assets that can increase in value, and they retain a tangible value, but most importantly, that they generate income for you while you own them. And so I really love the idea around owning rental real estate. I think it's one of the best vehicles for building wealth in our country. And there's a lot of tax benefits that, frankly, the government gives to us through the tax code to incentivize people to own and operate rental properties, whether it's commercial property or residential. And so there's a lot of advantages to that. And it's something I encourage everyone to look into, is being involved, having some exposure to rental real estate. And going on beyond that, I love owning mortgage notes as an investment because it gives a steady income component, and mortgages have value. As most of your listeners have experienced, mortgages get bought and sold on the secondary market every day. And this happens all the time between banks and lending institutions. But what a lot of people don't know is that individual investors can own a mortgage on a residential property or a commercial property. And when you do that, you're effectively stepping into the shoes of the bank. You own the mortgage and all the rights associated with it. You have an investment which is backed by the real estate, by something of tangible value. And so that gives a lot of downside protection. And the best part is you get paid while you wait, because you have monthly payments coming in each month on that asset. And so that's why I really love the narrative around owning mortgage notes as part of your portfolio. But those are the main things. It's real estate, mortgage notes, and also businesses can fall under this category. Buying an existing business or starting one from scratch. That is an asset that you can be involved with operating it or not if you choose, and depending on how it's set up. But it holds value, hopefully will grow in value over time, but it generates income while you wait.
Right. So, hey, let's talk about the real estate market first. It's very inflated. It's trading at all-time highs. Doesn't that increase your risk? In spite of it, risk because you're buying properties based upon future cash flow that your tenants are going to provide you in the form of rental payments. And if a market is very inflated and overpriced, that has to increase your risk, doesn't it?
No, absolutely. It does increase your risk. And for any asset class, there's a time to buy and a time not to buy. So right now, absolutely, real estate is in the top of its cycle. It has been for a long time. So I encourage people to learn about it. buy real estate if an opportunity appears where it's generating good, solid cash flow, covering all of your expenses, and move ahead. When you do that, that really minimizes your downside risk. I would never encourage anyone to buy for speculation or buy for future appreciation, because it may not come, or it may not come anytime soon. And if you're counting on that, you could be left in a really difficult situation. But if you buy well, but what I mean by that is real estate that is generating cash flow today with today's expenses, today's income, and the property is covering itself, then you're okay. And that's really something to be mindful about. For someone that might be looking to get started now, yeah, maybe right now is not the time to buy, but you can focus on your education, learning about real estate. There's a lot to learn. And there will be a time again in the future where absolutely it's a time to acquire and buy real estate.
Okay, so let's talk about these notes here. How hard is it to find them to buy, and how hard is it to figure out what you should pay for them?
Well, the mortgage notes is something I've been a business I've been involved with for over a dozen years, and there's no set thing. It's not a perfect science. There's definitely some inefficiencies in the marketplace, but it's like anything else. Think about your risk tolerance and what you're comfortable with, because you can buy a super safe note that is well protected by equity and has a great track record and is super secure. That's going to give you a lower rate of return than a note where you're taking on some more risk. Maybe the borrower is less of a good credit risk, or the equity position is not as desirable, or the property is not desirable. Those are going to pay you a higher rate of return, higher cash flow. And so it comes down to what you're comfortable with. For someone starting out, definitely stick with loans at a lower risk to learn with, because there's less room for mistakes there. And as far as finding notes, there's a few different ways to do that. An investor can invest in a note fund, which is managed professionally, and the fund managers take care of going out to the marketplace to source notes, to buy them, do the due diligence, and analyze them. So that's one way, is invest as a passive investor in a note fund. And the other way is individually buying notes. Now, a lot of this is done through individual relationships, personal relationships between note investors. If you get involved with that community, there will be opportunities to buy and sell notes between investors. It's something that happens every day, all the time. It doesn't matter what the market is. There's always people looking to sell notes and people looking to buy notes for liquidity. So those are the main ways. It's really investing in a managed note fund, or doing the individual note investing where you can go out and buy them.
And I got a question for you. So if you're going to go out and buy notes individually, which can be done, A is, how do you find them? And B is, does the average investor have the tools necessary to figure out whether these notes are a good deal or not?
Yeah, definitely. Definitely, they can be found. A lot of real estate investors and real estate investment groups will have people that are note investors, and they will sell notes. Maybe they have a property they originated a note on as a seller financing, and then they'll turn around and sell it. So that's a great place to look. Start with your local real estate investment group, and do some networking, get to know people. But a lot of it is through individual relationships. And once you've bought a note from someone, chances are the next time they have notes to sell, they're going to call you and let you know that they have something available. And so that those are really, really the best ways. And over time, that network, that contact list that you have, it grows and builds, and you'll be more keyed into those conversations when they come up. And as far as knowing what to look at, knowing what mistakes not to make, very important. Educating yourself before you buy anything is the best way. There's a lot of good books that are out there that are available about note investing. It's a great place to start with low investment, and there's also education courses that you can take and workshops to learn more about it.
Okay, so what kind of returns can you get, Fred, on note investing? Obviously, you might have a 5% coupon, but you're not going to pay full price for a note, right?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
That's correct. Exactly. When you buy notes, they are traditionally sold at a discount. So in other words, a note that, let's say you have a note for $100,000 loan balance, that note might get sold for, let's say 90,000 or 85,000, maybe 80,000. So it can be bought for less than the amount owed. And when you do that, that increases the yield on the note. So the note face interest rate might be 6%, but because of the discount, that's going to get bumped up to 7% or 8% because you bought it at a discount. And let me just add one more thing. When that rate of return gets increased like that, from the perspective of the borrower who's making the monthly payments on that note, they're still paying the 6% that is agreed to in the promissory note in the contract. That does not ever change. The payment amount or the interest rate will not change. It's as specified in that contract. And when that contract is sold to a new buyer, the new buyer has to go with what's been agreed to already previously.
Sure. So, and then you've got security for the property. So a lot of things factor into that. Like if you're in a state that they don't like you to do foreclosures anymore, then your security isn't worth as much as it was, like perhaps before the pandemic, right?
Well, there's definitely been a lot of things that happened throughout the pandemic with respect to foreclosures and all of that. But for the most part, it's been managed well in most states. Those foreclosure restrictions have been lifted, and things are heading back to a normal state in the court system, because ultimately that security position is what is the guarantee for that investment. And if foreclosures were to be completely stopped forever, then lenders are not going to lend money on properties anymore because they have no way to recoup their investment if something went wrong. And so that's what we're seeing, that it was really more of a temporary hold for some time. And granted, it was needed due to the circumstances of the pandemic. But as things are transitioning now, the landscape is changing quickly. And that's different in every state for sure. As you mentioned, some states have different rules than others, and we see that. And so for us as investors, it's important to pay attention to that on a state-by-state basis, especially where the states where we have notes, where we own notes, we want to stay abreast of any changes in that legal landscape. And working with competent legal counsel in your states where you're active, that's going to go a long way to help you with doing any planning and providing guidance for operating your note investing business.
I gotcha. Hey, one thing, do notes in states that are like non-recourse states, or let me rephrase that. In states where they're non-judicial states, states where they're judicial, meaning if you want to foreclose a property, you own a property, you have a mortgage on a property, you want to foreclose on it. Certain states like New York, New Jersey, Florida require you to actually go to court and get a judgment of foreclosure in order to foreclose, whereas places like California and Arizona and other states, you can simply go to a trustee's sale because you have a deed of trust, sell it off without getting the judgment of foreclosure. The states where it's easier to foreclose, do the notes go for a higher price there?
They do. There's definitely more demand for notes in those states, those deed of trust states. Where you see that non-judicial, they're the non-judicial states, and traditionally those are the ones in the western part of the U.S. With the exception, there's a couple of exceptions like Virginia and Maryland and Tennessee are some of the ones, but for the most part, the western states geographically, those are the ones that are non-judicial, and yeah, absolutely, there's more demand for notes in those states, and like anything else with supply and demand, that does impact the pricing.
That's so interesting. I mean, intuitively, you would say yes, that would be the case, but in fact, till you actually see it with your own eyes, you don't really know. And I've never heard anybody opine on that subject before. So do appreciate your coming on here. Hey, you're starting out with $10,000 right now, Fred. You see the turmoil, the craziness going on. Where do you put your money?
Where do I put my money?
I would Joe Sixpack or Steve Chardonnay. You're starting out with 10 grand. You got your $10,000 college graduation present. What would you do?
Yeah. What would I do? Great question. I have a bias towards notes. So that's the business I'm in, and that's an investment I know very well. So I would go right to that, find a small note, or even here's something I can talk about, a partial. You can buy a partial of a note. And what that means is instead of buying the whole note in its entirety, you can buy just a slice of it. And maybe you have $10,000. So there's $100,000 note for sale, but you can buy a $10,000 slice of that. And what that might give you is the next, let's say, 4 years of payments of the payment stream. And then after that, it reverts back to the note seller. And so that's a great way to get started with smaller amounts like that, is you can buy what's called a partial. And in my book, I have a whole chapter dedicated to this in my book about note investing, is the whole concept of partials and how they work. And it's a great way for someone that wants to just dip their toe in the water in the world of note investing, is to buy a partial. Start with that, which you can get in for a lesser amount of money, and you can see how the investment works and see if it's right for you.
All right, that's cool. So your book, why don't you tell us about your book now and how we get it?
Absolutely. So my book was released in 2021. It's called The Little Green Book of Note Investing. It's available on Amazon, and you can find it there. And really, the concept of the book is to give a high-level overview of the note investing business and multiple aspects of it. We get into things like partials and how they work, and why do banks sell mortgages, and there's a lot of reasons behind that, as well as how to invest in notes using retirement account money. You can use what's called a self-directed IRA. And it's a great vehicle for owning notes, because the one downside of note investing is that it generates a lot of tax liability. And there's no deductions, there's no depreciation like there is with real estate. And so a powerful strategy is to do some note investing using tax advantage accounts like a Roth IRA, which is super powerful. And that really will be impactful over the long term when you don't have taxes being drawn out of the account that way.
That's very cool. Hey, we really appreciate you coming on with us. Hey, to get a copy of your book, how do you do that?
Yeah, just you can go on Amazon. I'll share a link also for you if you can include that in the release notes. But if you go on Amazon.com, search for the little green book of note investing, it should come right up, or you can search under my name, Fred Moskowitz.
All right. And the link will be in the show notes to this interview on financialsurvivalnetwork.com. Fred, maybe we'll have a discussion again. We'll get a couple people in who've got a couple bucks to invest, and you help them guide them. Obviously, you're not giving financial advice because you're not a financial advisor, nor am I. But we'd love to find out more about this. If you got a question for Fred, shoot me an email, kl@kerrylutz.com. We'll get you an answer. We will definitely have you back on, Fred.
Thank you.
Book, and we'll talk to you again real soon.
Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.